Are you chasing the wrong asset class simply because it feels familiar? Could the path to real wealth actually be hidden inside the model that most investors completely overlook? What if the asset that produces the greatest long term returns isn't the one that you can touch, but the one that you can scale? I'm Justin Kaiser, CEO of Empire Franchising, and after 24 years of building businesses, investing in companies, scaling franchise platforms, and studying wealth creation at its core, I've seen firsthand how most people spend their entire lives focused on accumulation, while the wealthy focus on multiplication. That distinction alone determines everything because the average person is taught to buy real estate, hold real estate, rent real estate, and hope that appreciation and cash flow create financial freedom over decades. And this works, don't get me wrong, but there's another path as well, a path that I think is more accessible and certainly less work. And that's acquiring equity in scalable businesses that can grow 5x, 10x, or even 20x. Both real estate and franchise equity require time, but the trajectory of that time is completely different. Real estate grows linearly, franchise equity grows exponentially. And exponential growth is where real wealth is created. Let me explain exactly why. When you buy a rental property, your returns come from four primary sources: cash flow, appreciation, loan paydown, and tax advantages. Those are all powerful. I'm not dismissing real estate. Real estate is one of the most proven wealth building businesses in history, but it does have one structural limitation. It doesn't scale without proportional capital. If you want to double your income, you usually need to double your properties, double your down payments, double your debt exposure, double your risk. It's a one-to-one relationship. You invest more capital to get more return. Franchise equity operates on a completely different equation because franchise equity allows you to own a percentage of an entire platform, not just a single location. And that distinction changes everything. When you own equity in a franchisor, your returns are tied to the growth of the entire system, not one location, not one unit, but the entire network. So let's break this down with real numbers. Imagine that you buy a rental property with $100,000 down. Maybe it produces $6,000 to $10,000 per year in net cash flow after expenses. That's a 6% to 10% cash on cash return, plus appreciation over time. Maybe the property doubles in value in 10 to 15 years. That's solid, stable, proven. But now compare that to franchise equity. Imagine you invest $100,000 into a franchisor at an early stage, and that franchisor grows to 100 locations, which is extremely achievable in franchising with the right systems and leadership. If the average franchise fee is $50,000, that alone generates $5 million in franchise fee revenue. And if the franchisor earns a 6% royalty on average unit volume of, say, $800,000, that's $48,000 per year per unit across 100 units. That's $4.8 million per year in recurring royalty revenue. Now, apply a very conservative 6x valuation multiple. That's a $28.8 million valuation. And if you own just, say, 3% equity of that, your stake is worth $864,000 from a $100,000 investment. That's over an 8x return. And that doesn't include ongoing cash distributions. That's not hypothetical. That's exactly how franchising works. Sophisticated investors invest in structures designed to produce those outcomes because structure determines destiny. And franchising is one of the most powerful wealth building structures ever created, because it allows growth without proportional capital investment from the franchisor. The franchisees fund the expansion, the franchisor retains the equity, and the equity holders benefit from the entire system's growth. Now, let's talk about scalability, because this is where the difference becomes undeniable. Real estate is capital constrained. Franchise equity is system constrained, and systems scale infinitely better than capital. When a franchisor has the right systems, the right marketing, sales infrastructure, operational framework, and brand positioning, they can grow from 10 units to 100 units, from 100 units to 500 units without needing to personally fund each location. The franchisees provide the capital. The The franchisor provides the platform, and the equity holders benefit from the expansion of the platform itself. You can't control market cycles, interest rates, or economic conditions, but you can control what you own. And ownership in scalable platforms gives you leverage over time itself. Because as the platform grows, your ownership grows in value without requiring additional capital. Now, let's talk about risk. Because people assume real estate is safer, and in some ways, it is. Real estate is tangible, it's predictable, familiar, but familiarity doesn't equal superiority. Because the greatest risk in investing is not volatility, it's opportunity cost. It's spending 10 years earning 2x returns when you could have earned 10x returns. It's allocating capital to assets that cannot scale beyond their physical limitations. Franchising, when done correctly, reduces operational risk at the franchisor level because the franchisees operate the individual locations, and the franchisor earns revenue across the entire system. Diversification is built into the structure. Instead of relying on one tenant, you benefit from dozens or even hundreds of independent franchise operators contributing to the platform's growth. And here's the deeper truth that most people never realize. Real estate creates income. Franchise equity creates wealth. Income pays bills. Wealth changes your life. Income requires maintenance. Wealth compounds. Income is linear and wealth is exponential, and exponential growth is the force that builds empires. I've personally structured franchise platforms, built franchise systems, and invested in scalable franchisors. And I can tell you firsthand that real wealth isn't in owning locations, it's in owning the platform. Because when you own the platform, you own the growth of everyone else's effort. You own the royalties, you own the expansion, you own the valuation increase. And the valuation is where the real money is made. Most investors never step into franchise equity because it's unfamiliar, because they weren't taught about it, because it doesn't have the same cultural visibility as real estate. But the people who understand it, the people who recognize its scalability, position themselves differently. They stop thinking like consumers of assets, and they start thinking like owners of platforms. And that shift alone changes everything. Now, this doesn't mean that real estate is bad. Real estate is excellent for stability, for cash flow, and for capital preservation. But franchise equity is superior for exponential growth. It's also superior for valuation expansion and long-term wealth creation. The most sophisticated investors don't choose one. They use both strategically. Real estate for stability, franchise equity for growth. Because stability protects wealth, and growth creates wealth. Understanding the difference between those two roles is what separates average investors from empire builders. At Empire Franchising, this is exactly what we do. We partner with emerging franchisors. We build scalable platforms, and we create equity opportunities designed for exponential growth. Because we believe the future belongs to those who don't just own assets, but own the systems that grow, systems that scale, systems that compound over time. So here's my challenge to you. Stop asking what feels safest and start asking what creates the greatest long-term leverage. Stop thinking only in terms of income and start thinking in terms of equity, because equity is ownership and ownership is freedom. If this perspective shifted the way that you see investing, subscribe to the channel, follow our journey, and visit empirefranchising.com to contact us today. Because we're not just talking about building businesses, we're building platforms and building empires. And those who understand that today will own the future tomorrow.